Hi, I'm Kortsch with the Monetary Trust Initiative. I want to spend this short session talking about our federal deficits. I noticed that in the last election that we just had, that neither party, neither the Republicans nor Democrats, brought this up as an election issue because the deficits have dropped significantly. Let me give you the good numbers. I have a page here. This is directly from Treasury. And I've rounded them off to sort of basically 2 decimals. In 2009, the deficit was 1.4 trillion. In 10, it was 1.3. In 11, it was 1.3. In 12, it had dropped to 1.087. In 2013, down to 680 billion. And currently, the 2014 budget, that year that has just finished, according to the Congressional Budget Office, we had a deficit of only 483 billion. That's all good news. And there are numerous reasons for that. Tax income has increased. Some of the stabilization funds are not as outgoing anymore. But I want to home in on one issue that is very major, that tends not to be addressed, and I want to talk about that. Let's switch from deficit to debt. Okay, so deficit is the amount that we go in the hole every year. Debt is the accumulated total since year 0. We currently owe just over 18 trillion. That's as of Treasury. I just checked it yesterday. And the average rate on the marketable portion of that is 2%. It's 2.01 something. Let's call it 2%. Nice round number. And all of these numbers, the point I'm trying to make is not dependent on exactitude here, but on where it is that I'm going in the generality of what is actually happening. So currently, the federal government is paying only 2% on that debt, which saves an enormous amount of money. All right. What were those rates in the past? Well, for instance, in the year 2000, the average Treasury rate was 6.4%. That's taking all the marketable treasuries together and averaging them out. And again, these numbers are from Treasury. 2001 was 6.6%, had gone up. 2002, 5.2, 4.3. You're going, okay, all these numbers, what do these numbers mean? You're drowning me in data. Here's the deal. The difference between what we normally pay in our debt and what we're currently paying is about 3%. And you can argue with me whether it's a little higher or a little lower. How much money is that? What's that worth? Well, 3% of 18 trillion is $540 billion per year. So in actual fact, right now, our deficit is 540 billion lower than it would be under normal circumstances. So, quote, under normal circumstances, our deficit this year would still be in excess of $1 trillion. Oh, but now all of a sudden it's not so good anymore. So what's happening? That 540 billion, that's real value. Where does that value come from? It comes from an effect of a forcible reduction of the interest rates. We call that financial repression. That's the $63 economic term for what's going on. The Fed and the Treasury work together to lower interest rates. There are other reasons for this. I'm well aware of that. But one of the good things, quote, as far as the Treasury is concerned, is that it greatly reduces the deficit because the federal government doesn't have to pay that $540 billion. Okay, that's real value. Where does it come from? It comes from us in this country who are savers, especially the retired people. All of a sudden, the amounts of money that retired people thought they needed in order to have a comfortable or healthy retirement is not nearly enough anymore because the Fed has lowered the interest rates, let's call it the Fed funds, that's what they directly control, down to 25 bips or 1/4%. That is as close to zero as you can possibly get. Okay? And in that reduction, what they've done is they're transferring value from people who've saved to those who have not, especially the federal government. Are you aware of that? This is a hidden tax that is of tremendous help to the government. It's interesting that the AARP, which is the largest voting bloc that I know of, has never done an article. I've never seen anything about the AARP saying, hey, whoa, there's financial repression for us as members, those of us who are retired. What's happening to this value that's going to the federal government as a hidden tax? I want you to be aware of this. That's really the point of this talk. talk to your congressman or senator, ask them, saying, sir, why are you doing this hidden tax for us? And further, I have much more information on this in the book, which you can buy anywhere, The Next Money Crash Dash and How to Avoid It, coming from talks given at a conference at the Federal Reserve Bank that I organized. Thank you. I hope you have a wonderful day.